For most investors, it becomes very difficult to make profits when the market is moving relatively sideways. The Dow, even in this slow uptrend, has a day up, day down, a day up, a day, 2 days down. Even though we're moving up slowly, it's whipping people around. The NASDAQ is stuck absolutely sideways in between the 50-day moving average and the T-line, the black line here. This tells us it's either going to break one way or the other. Stochastics are closer to the oversold area, but not in any convincing manner. Investor sentiment works the same way time after time. One of the candlestick patterns is an indecisive little rounding bottom, which is essentially the investor sentiment building up and can result in this type of situation. Does it happen like this all the time? Not necessarily, but the probabilities are great that if you see a situation like this, that something positive is going to happen out of it. That was the cause of our recommendation on SXCI this past week, because it was creating a rounding bottom, and we're taking advantage of the big price move coming off of that breakout. And a few weeks back, we recommended CIE because of the rounding bottom, and had a good profitable move off of that. This is not to do anything braggadocious. This is just to illustrate that investor sentiment works consistently in the same way, and the patterns that they create are usually going to result in something that is going to be recognized as a high profit situation. And simple rules applied to candlestick analysis make it very easy to stay in positions that might otherwise scare you out. For example, we recommended shorting Goodyear Tire a few months back when it gapped down and did a doji below the T-line. A very simple strategy is if you see a strong sell signal and a close below the T-line, it's going to remain in a downtrend until you see a candlestick buy signal and a close up above the T-line. What makes it easy to get into a reversal situation or cover your short positions is seeing a very strong buy signal. The doji followed by a bullish engulfing signal illustrate what we call a left-right combo, a very strong bullish reversal signal. Number one. Number two, it closed right on the T-line, which has been acting as resistance the whole way down in this trend. Makes this very simple for an entry strategy. If it opens positive, number one, you're confirming the left-right combo signal, and number two, you're coming up above the T-line. Makes for a very strong probability that you're now in an uptrend. This is not rocket science. This is merely taking the observations that Japanese rice traders have developed over the last 400 years and using the common sense elements of investing put into a graphic depiction. That'll be it. We'll see you in the chat rooms.